top 100 financial advisor, two-time author, one-time bestseller, and we are here to talk about the stock market. Now, I don't have my normal setup today. I'm not in the normal place I am. I don't have a microphone. It's a lot going on. So we're going to get through this as best we can. This will be a short video. I do want to tell you what happened 7 out of the last 12 recessions. And, excuse me, it is not what you think. It shocked me today. And lets us know a lot about what we've been talking about. So it's super interesting. So make sure that you go ahead and hit the share button now. I am going to do that on my phone, as well as monitor for any questions or comments. Hopefully I do not drop this computer. It is in my lap, so I will be a little less animated than I normally am, but we are going to keep the energy going. All right, so as usual, we always do a commercial break. This is the perfect portfolio course. Will really come in handy, especially with the lesson that we're talking about today. So make sure that you stick around and see what that's going to be about the recession piece. But essentially, two things that the perfect portfolio course does. Number one, it helps you to reduce your fees, because even in a recession, when the market is down, especially in your 401k, you are still paying somebody a fee, whether you know it or not. The average investor can spend up to $1,500 per year in fees and not know. So I want to show you how to reduce those fees, but also how to choose the right investments and where to actually start and do it the right way. The perfect portfolio course is the easiest way to do that. If you've been here watching these videos, you've seen the Instagram, you've seen the Facebook, the YouTube. Yes, we do have YouTube. You know it's simple. You know it's easy to understand. You know it's well worth it. So I can help you save that for the price of the course is way less than what you would pay paying fees every year. In 10 years, that's $15,000. It should have been in your pocket, but isn't, because you're paying fees and other things. All right, now I've given you enough time to share. I'm going to go to the whiteboard. We haven't done a whiteboard in quite some time, so I'm going to do that now. And you won't be able to see me, but you should be able to hear. So please let me know that you can hear. If not, I'm going to have an issue with that. All right, so did you know stocks have actually gone up in 7 of the last 12 recessions? And before we go on, I do want to point out my good friend here at Financial Advisor Kansas City. They are one of my favorite Instagram accounts. They have a lot of great content. So do check them out on Instagram. All right, now let's get into it. So remember when we talked about, and let me pull this back up so you guys can still see me. Remember, we had talked about this before, where we discussed that the economy and the stock market are not the exact same things. Most of the times they're somewhat similar. They kind of, it's kind of like I said, a man or a woman walking their dog, with the dog kind of do all types of random weird things. But the economy is the economy. The economy is what I like to say is the reality, in that unemployment, what people are getting paid, how high your rent is, student loan debt. The economy is what you and I really feel. The stock market is what people think is going to happen. And a lot of times that can be positive or negative, but they are not always the exact same thing. And in 7 of the 12 previous recessions, the stock market actually went up. Look at that. All right, so let's go back and look at these. The last 12 recessions, we've got March 1945. The recession was only 19 months. And the stock market actually went up, as you can see here, 16.4%. If you go down to 1948 in December through October, it was up again, 8.7%. In the 50s, we were up from the recession 17.9%, which is actually the highest, I believe. I'm just scanning here. The few times that it was down, you've got 1958. Then you've got 1970. Then you've got 1973 to 75. The 70s were terrible. I don't know what y'all was doing back then. It wasn't me. Then you got pretty much what looks like the dot-com bubble and 9/11 here. It was only down, which really isn't that bad, 1.8%. Then you've got the Great Recession. The Great Recession was awful. And you see why the Great Recession was as bad as it was. It was down 37%. Now, it took off after that, right after June 2009 up until March 2020. I mean, the stock market, we hadn't lost no money, not a dime, between June 2009 and March 2020. That is a long time. But that's what happened. And right now, and this is not over, that's why I have the asterisks here. The stock market is up since July about 10.7%, which is pretty good given where we were earlier this year. The median, which is pretty much the middle, it's different than the average. You want to get technical about it, but on average, they last anywhere between 10 and 11 months. Now, that is not always the case. That is just, generally that's what happens. So, what does this tell us? What does this tell us about the stock market as a whole? Number one, it's not as risky as what a lot of us feel. A lot of us feel that you're investing in the stock market, it's super risky, you're going to lose all your money, you're afraid about what to invest in and not what to invest in, and just a lot of fear and confusion about that. Number one, know that it does not have to be the case. If you are checking your investment every single day, yes, you're going to be stressed. But as you saw, 7 out of the last 12 recessions, not just years, recessions, the worst times, more than half the time it was actually up. So that should give you a lot of comfort. That should give you a lot of comfort. And that was just the S&P 500. We're not talking about the best stocks out there, the Apples, the Googles, Microsofts, Domino's Pizza, blah, 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 blah. But that's just, relax. Invest for the long term, and 9 times out of 10, you are usually going to be okay. But also, you want to make sure that you're not being emotional, because when a recession hits, people pull out, people act a fool, and you turn around and you look up, the market is up. Remember, back in the Great Recession, when the stock market was down 37%, which is what it said, from 2009 up until this year, the stock market was up essentially almost every single year. But if your fear made you, put you into a position and put you into a spot, then you weren't going to be able to grow, and then you would have missed out on that money, which cost you money. So you want to make sure that you, number one, help manage your emotions. Number two, help manage your fees. And number three, choose quality investments. And in this case, a quality investment is just a super simple set it and forget it index fund. That's it. It doesn't have to be more complicated than that. It doesn't have to be. There are way more things that are better, but if you only got an index fund, you're gonna be all right. You're gonna be all right. All right, so I'm gonna take a few things here, a few questions. Yes, a lot of comfort. Yeah, I mean, we get this because of the news, and because, like, really, investing is actually really boring. I try and make it as exciting as possible when we sit here, we talk about it every day, but like, I'm not looking at my son's account every day getting stressed about what happened to Nike or whatever's company. I don't know. I'm just spitting out names. Because it should be boring. You guys know my process. I come in, I sit down, I make my investments, I come back 6 months and say, oh great, this is good, this isn't good, and I keep it pushing. But we try and make it more than what it should be. Some of us try and get penny stocks and do all these crazy things and actually end up losing money. You can be boring and be very wealthy. The vast majority of millionaires who do well in the stock market, do well in their 401ks, are extremely boring. Your investment should be boring so you can go focus on other things. Go vacation with your family when outside opens up, learn how to grill, I don't know, learn karate, whatever, right? Your investment should be boring. You should not have to be tied to your computer all the time trying to figure out if you're making the right moves. That's not the way that you should do it, which is why you should check out the Perfect Portfolio course. All right, question number 2. It's definitely going up. I have a mutual fund. My rate of return is 33%, cumulative 65. Yeah, and that's good. And that's real good. But it's good for you because you stayed. And that's the thing. People who got afraid back in March, back in April, and they sold out, they didn't get the return that you got. They're probably still sitting in cash, wondering when they should get back in, wondering if the market's going to take a double dip, wondering what's going to happen, because of the election. Like, I ain't got time for that. We have data, just like we have for the recessions, about what happens when whomever gets elected. Most of the time, you're going to be fine anyway, because you're going to be investing far longer than just 4 years. That's the key. So you should be relaxed. It should not be stressful. It's only stressful when you're looking at stuff you shouldn't be looking at, which is everybody just all of a sudden, oh my God, I'm looking at my 401k, it dropped. Yeah, I'd love just going back and searching through my timeline right during March, just because of the amount of people who are freaking out, who I didn't know I had a 401k because they weren't looking at it until things were bad. So of course you're going to be emotional. You want to take the emotion part out of it. Take comfort in the long term. Take comfort in the long term. If we can come back from the Great Recession, you're gonna be all right. And we've already, to a degree, I'm not gonna say we're all the way back because the virus is still here. There's still a bunch of things that can happen this year, but long-term investors almost always win. Investors who hold quality almost always win, and that is the point here. Yesterday was a great day. Today everything was in red. Yeah, it was. That was primarily because of tech. I know Apple, Microsoft, and Facebook were down relatively significantly, but again, because I'm not really into the day to day, nor should we be. I really wasn't even paying attention, which is why it wasn't the topic of the day because I looking at it every single day is not going to matter. Apple was in my view. Apple was a quality stock 6 months ago. Apple was a quality stock last year. What happened today when it dropped 2% or 3% or whatever it was don't affect me in no way. People are wondering about the stock split. Apple was a quality stock yesterday. It was a quality stock 6 months ago. It was a quality stock last year. They're splitting stocks. Sounds great to me because I'm investing anyway. Until Apple is not a quality stock, you keep rolling with it, which is the same process you should be going with. Don't let everybody else's emotions and focus take you off of where you should be and what you are trying to do. All right, so taking questions. How do you feel about BioRad? I don't know who or what BioRad is. If you have a stock symbol, feel free to type it in the comments and I'll pull it up right quick, just to give you my live thoughts and reactions, because you know y'all just be throwing stuff out here, which is fun. That's actually the fun part of doing this. Um, so feel free to throw it out there. We can learn together. Yesterday we did the NAACP ETF, which I had some thoughts about. I had a whole bunch more thoughts on Instagram yesterday, because of some of the stocks that were in there. But again, a lot of times, which is what I like about this, is that it's live and that we're all learning and doing things together. So it's not like pre-recorded where I do research years in advance, or not years in advance, a day in advance, and know exactly what I'm going to say. So that always makes it more interesting. So if you have a stock symbol for BioRad, let me know. I'll type it in. We can look at it together. All right. So again, for those who are just joining, A, thank you. I appreciate it. B, hit the share button. C, my name is Kevin Matthews, top 100 financial advisor, two-time author, one-time bestseller, and we are talking about this chart right here, that the stock market has gone up in 7 of the last 12 recessions. The stock market and the economy are actually two separate things, but they kind of sort of work together. In that, again, the economy is what's actually happening. The economy is minimum wage. The economy is, can people afford rent? The economy is unemployment. The stock market is what we expect these things to do. The only reason that people are buying Tesla right now as a stock, the only reason we're buying Apple right now as a stock is because we expect people to still buy iPhones. We expect Tesla to be the next whatever, right? The economy is what we know. The economy is like, this is what's actually happening. But that anytime things are bad, we expect and say, okay, I don't think that Apple's going to do this thing. I don't think, like oil, because of the way oil has been the last several months, we expect oil to go down, and oil is going down. Same thing with Kodak. I told y'all what was going to happen with Kodak, and I expected Kodak to fall, which is what the vast majority of people thought too, and it fell off. So the stock market is about what people expect. The economy is what's actually going down in your pocket right now. All right, I see some more comments. We'll take these, and then we'll be out. McDonald's stock is finally slowing due to recovery, which I'm happy about. Yeah, McDonald's had some. I want to say that they had their earnings call the other day. I didn't really read too much into it because I don't own McDonald's, but they did start to slow down a bit. Thoughts on why AT&T is not doing well? That is a question I need to sit down and answer because I do not know and I don't understand. I think Verizon is decent, so I don't know why AT&T is so incredibly bad right now. that is one we can definitely look into at some point because I too am confused. I did have AT&T the last part of this year and switched out in January. Thank God, otherwise I would have been stuck with it. But that's a part of what I tell you guys to do, and it's a part of what I teach in my course. Is those periodic reviews. What was a good stock 6 months ago may not be a good stock now. I've told you guys about the story of me in my son's account. We own JetBlue. JetBlue was a great stock in like 2019. At the end of the year, it tapered off. I sat down with my toddler. I'm like, look, I don't think we should have this anymore. We got out. All the airlines fell out right after that. Same thing with AT&T. I had AT&T for a bit. It was okay. It didn't do what I expected it to do. I hopped out, and it's just terrible now. So that is one we can look into. I don't know why it's not doing well because I think, and this is a guess here, I think Verizon is at least doing decently. So you would assume they would be in the same category. But there could be some other things that I don't know about AT&T right now. All right, haven't since January. They've been in a hole ever since. Yeah. Don't know if they're recovering, but I'm selling. Yeah, I mean you've had it for 6 months. I mean, you know, we'll come back to them. If they start to come back up, then we'll jump back. But yeah, it's not looking great for them for some reason. Do you have investments in Lowe's or Home Depot? I do not have investments in Lowe's or Home Depot. Excuse me. They do, however, I did do a video on those two. It was Lowe's, Home Depot, and CarMax. They tend to do well during hurricane season. Um, I think with some data from JP Morgan over the last 20 years, those were like some of the better stocks during hurricane season. I don't own any of them. Just throwing that information out there for you guys. Take it and investigate, if you will. All right, I'm ready to dump AT&T. I mean, I don't make the decisions for y'all. I can only tell you what I would do if I were in that position and what I actually did because I did own AT&T and T and I did get rid of it. Um, Again, I am curious, and maybe if y'all want me to do a video on it, we can and find out what in the world happened to AT&T and T and why. But again, that's why you do these periodic reviews. It's why I teach it in the Perfect Portfolio course, where we go through either every 3 months, which is every quarter, or every 6 months. You go back and reevaluate. Is this still a quality stock? Do they meet your boxes, whatever it is? You got to go back and say yes or no for those. All right. Biorad is BIO. So let me pull this up. I could do it here. I wanted to finance. This is the only stock we're going to look up today. I try and move these up on Fridays. And we might look at AT&T just for the heck of doing it. Oh, this is interesting. So $500 a share. So it's not. So again, I'm reacting to it live. So $500 a share is not $5. So that's okay. Let's see full screen. See what's going on here. I'm assuming it is a biotech company. They have been going up very recently over the last year, so that's good. I mean, this looks good. I still don't know what they do, but this does look good. Market cap 15 billion. Okay, I'm reading. This isn't the most entertaining TV. um, okay, so again, this is a analysis financials profile. So this is a live look, not a recommendation by any means. Um, Here's our information. So you can clearly click here and learn more about what they do. They seem to be more of a biotechnology company, which is bound to be hot right now because of COVID, which is good. Um, right now, and again, this is a oh wow, I told you how much they get paid. Didn't know it was that easy to find. um, and it has the year they were born. That's interesting. Um, Aside from that, I knew you can find it in the report. I just didn't know it was that easy. So right now, I mean, it looks decent. There are no red flags. All I can really say, there are no red flags. I'm not telling nobody to buy it. I'm not telling nobody to sell it. I'm just saying there are no red flags here, at least from the 12 seconds that we just looked at it. So take that for what you will. But it seems to be interesting. I am interested in learning more. I will say that. It was down today. It was down. It wasn't even a percent. So I'm not super concerned about that. All right. Video AT&T. All right. So I'm gonna add that to the list. I think that is a good one to do. It's a company we all know. It's a company some of us are interested in. So I will add that to the content to do list, which we do have. If you have any other questions or any other stocks or investments, maybe you want to learn about mutual funds, maybe you want to talk about ETFs, maybe you want to know the difference between the two. Whatever it is, feel free to add that to the comment section, and I will add it to the list of things to talk about because this is for y'all. I am here for y'all to help educate you and make investing easier for you. All right, so that is it for me today. Thank y'all for rocking with me this week. If you're new here, we do this Monday through Friday. I try to be around 10 Eastern, 7 p.m. LA time. And on Fridays, we kind of shifted up just a bit just because the baby and all kind of stuff. All right, so that's it for me today. Y'all be safe, wear a mask, do all those things. Also, if you're new and you haven't seen it already, make sure you click the link above to go to the Perfect Portfolio course so you can learn more about how to invest and actually put these things into practice. All right, thank y'all. I will see y'all on Monday. All right.